West Fraser Timber taking about a $400 million write-down associated with its U.S. lumber operations, citing challenging economic conditions. Let's go to Ketan Mamtora, an analyst at BMO Capital Markets. Thanks for joining us today.
Good evening. Pleasure to be here.
So this is referred to as a goodwill impairment charge. What does that mean?
Well, look, I mean, what has happened is we've had a very extended downturn in the sort of the lumber business, right? It's been 2 years that most of the public producers have had negative EBITDA. And this is much longer than anyone would have expected. So against this background where housing demand has been really soft, what West Fraser has done is basically reduce its long-term expectations of what trend pricing is. And that is what is kind of, reflected in the press release last evening when they took the impairment.
Okay, so you mentioned sort of a repricing environment. Essentially, where else would they get that $400 million amount? How do they get to that?
Well, essentially what these companies do, when they have goodwill in their books, essentially what they are doing is they are looking at what trend pricing is for lumber and kind of what is the earnings power of those assets. So essentially what they are doing now is, given how extended this downturn has been, they are recalibrating those expectations lower, and that is what is driving this impairment charge.
Okay, how rare is this kind of charge?
Not very rare, I would say. In down cycles, this is when we see the most. So I'm not shocked that this has happened. The amount of the impairment is large, but during down cycles, this does tend to happen.
Do you expect to hear about more of these from other firms in that same business?
It is possible. It is possible that this could happen, especially companies that have done acquisitions in recent years, especially during the pandemic, when lumber prices were really strong, when housing demand was really strong. And so companies that have done acquisitions during this time, we could see some impairment from these companies.
Okay, that being said, shares moved up today. They gained. So how are investors sort of interpreting this news?
Well, I think today, in general, the housing complex, whether it is the home builders, whether it is the wood product companies, the building product companies, we had a pretty strong day. And some of it is driven by, the expectation that housing demand will pick up as mortgage rates will come down. We had from the U.S. administration, the president talked about, for Fannie Mae and Freddie Mac to buy the mortgage bonds. And if that were to help lower the mortgage rates, that would help to kickstart housing demand. We had also housing data that came out this morning. Both housing starts and building permits continue to remain under pressure. Year till date through October, both single-family starts and single-family building permits are down about 7% on a year-till-date basis. And we tend to focus on single-family activity because that consumes about 3 times as much wood as multifamily. And the key issue has been affordability. To the extent that mortgage rates come down, that will help to kickstart housing demand.
Okay, so we'll keep a watch on that. Is this stock a buy at this point?
Yes, it is. I like West Fraser a lot at these levels. Yes, housing demand has been weak, and we've seen a down cycle in commodity prices. But West Fraser is a well-run company. They've invested in the assets over the years. They've got a very strong balance sheet. They still have a net cash position at pretty much bottom of the cycle. And there is tremendous amount of torque that this company has to upswing in housing demand, to upswing in commodity prices, both lumber and oriented strand board, which goes into the exterior sheathing of the home. West Fraser is #1 in both these product categories. Prices are very depressed in both of these. So when housing demand improves, it is entirely possible that we see a pretty healthy pickup in prices for commodities, and that will help to drive EBITDA for West Fraser. We've seen capacity curtailments in both lumber and OSB over the last couple of quarters, and that is also helping to improve supply-demand balance. So I think the first leg of improvement comes from these supply cuts, and the second leg comes from demand improvement, which could happen in the back half of this year.
I was going to say this is very tied, as you said, to the cutting of interest rates, which we, of course, know could not happen depending on what comes out and happens in the American economy over the next year. If there is no further lowering of the interest rates, do you think that this company will continue to struggle even to the end of the year?
Well, if we don't see any reduction in mortgage rates, then I think it is difficult to argue that housing demand really picks up. West Fraser is pretty well balanced between new residential construction and repair and remodeling, and both sides have been quite depressed. If we don't see any improvement in or lowering of mortgage rates, then I think from a growth standpoint, it's hard to see that we see a big jump. However, as I mentioned earlier, we are seeing capacity curtailments by several players in both lumber and OSB, and that is to kind of rebalance to this new demand reality. And that will help to at least modestly improve prices, which could help EBITDA for West Fraser and other players in the industry.
All right, Ketan Mamtora, so thanks for joining us. Appreciate your time.